Good morning, welcome to Goodwill, and in this video presentation we are going to see the conclusion for the crude oil option derivative trading for this particular contract. And as you all know that MCX launched a crude oil option derivative, and from May 16th, from May 17th we framed strategies for trading in these contracts, and today it's going to expire. So even with some liquidity issues, we try to frame few strategies, and let's see, this is a conclusion video and we should know what happened in this contract, what we tried in this contract, so that it will have, we will gain some confidence, and we need to have some logical approach towards this contract. And the crude contract launched on May 16th. Maybe I may be correct, and the chart you're seeing is 60 minutes candlestick chart for this contract. On May 17th, when the price opened around 4,870s, we went and sell put 4,800 strike. So when you sell a put option, your expectation is market is not going to come below this, and it's going to move up. So 4,800 strike, we thought of going for a selling. So the price went up, and you could see that the price went near 4,980s. And we made a decent profit around 55 points. We have the playlist. You can go to our YouTube channel, see the playlist. Every day we had posted the updates before or just near the market opening. So we don't want to close this position, even though we know that the crude is moving. Crude had moved a lot, but still, for educational reasons, we want to still hold the position to show what are the strategies we could frame while trading in option contracts. So what happened? We made our expectation very clear. So till 4,750, we thought the price will, even though if there is a drop, because our strike rate is 4,800, we thought till 4,750 we can have the maximum pain stop, which means that below this range we need to do some adjustments, option adjustments. Our expectation at that point of time was very clear that we expected some consolidation within this zone, even if there is a drop. But what happened, and we thought that once the price starts moving, coming near 4,800, we don't want to carry on with a losing strike, because we know that we have a next sell. So in order to protect it, we thought we can sell a call at 4,800 once the price starts crossing 4,800. So same strike, same contract, but with a gap, with some gap, which means that we had crossed some few days to put some time decay in our side. So now see a sort of strangle position we have. What happened? But what happened the other way was, the price after breaking 4,800, it came very drastically. It shooted down. Because our pain point was 4,750. At that time we couldn't go and give you any updates. So but still we could say that the position is locked. But what is the use? So one thing is going deep in the money. The 4,800 is in the money, which will be having a more delta, and since the price is dropping, it will have an increase in volatility. Increase in volatility means it will increase the price of the premium we have put sell, and selling dropping is always in favor of puts. And the price continued to drop till 4,480. Till this time we didn't do anything. Of course, we went up in a loss. So from there, what we took various trading decisions. We bought two contracts. Okay, we bought two contracts, and we bought a call buy at 4,600 and call buy 4,500 strike, and we tried to book some minimum profit in order to mitigate all those losses we made earlier. Once the price reaches 4,600, we did another beautiful thing. We went and we buy a 4,550 put option, because we thought from here the price will drop down. So exactly that happened, and the price fell down near 4,600. So till that point we didn't do anything, and once the price reaches 4,420 or 60, so we booked the profit for this 4,450 put buy. We bought it. So we started making some profit in order to in order to close some losses made from 4800, because the other thing, 4000 call sell at 4800, it's giving us profit. We did a few things, that we booked a profit for 4800 call also, when the price dropped, expecting, you could see when the price dropped we booked some profit. What we did, when the price dropped here, we booked profit 4800. We booked the call sell at 4800, because we know that the delta is very low for call 800. So at 30, probably at 30, the price was at, we took the call sell at 105, and when the premium was around 30, we booked the profit, and again we took a call sell at, you could see, again we took a call sell at 4500. On May 29th, we took a call sell at 4550. This is the May 29th. I hope I remember May 29th. Yes, we took a call sell, since the price again it starts coming down. So here at this point we bought one put, and everything moved well. We made few adjustments here. We went for, since we thought that since the price is coming down below this 4320 after breaking a low, we thought of buying. That is the first loss we made. We bought 4350 put buy, and immediately closed on the next day with a loss. So that's the first loss we made. Booked realized loss, and after that a few things we try to adjust by the end of this contract, because still we know that we are holding this 4800. So few things, because we took the worst scenario into consideration, because once the price starts moving above 4480, we thought if the price moves above 4520, it will be good for the 4800 put sell. We are having a put sell at 4800. See, it's deep in the money. That's our problem child. But after that we had a very sharp drop, which made us to feel that we want to be on the safer side. We advise traders to wait and see whether the price is coming down below 4420 and go for a put buy. But what happened, this 4000 put buy, we assume that everybody would have bought. That's the reason for this video presentation. We will take the worst case scenario. So what happened after that, once the price is coming down below 4390, so we thought that we can go for a call sell in order to protect this 4800 put sell. These few things went out in a loss, and we closed all the position. Finally, yesterday the market went up near 4520, and we closed that put sell at 4800 also. So coming back to the profit and loss calculation, we could see the net profit we had made was around 331, and few losses. The big loss is 175 points we made in 4800 put sell. That's the biggest loss. Since we are seller of option, we could carry on with all these strategies. The biggest advantage is we were seller of options, and apart from the few losses we made in the later sessions, this alone came up to 82 points. The few losses we tried, if we could do certain adjustments like a real trader. For example, if I am trading real in the market, I would have sit there and I would have done certain things to mitigate all these losses. But taking into account, see, finally we would have made a net profit of 74 points, which means 7400 rupees in crude oil, which is not at all bad given the situations. After making a big drop, after see this sort of, even in with this sort of drop, we made some terrible excellent we made some excellent ideas, like going short at going for a put buy at 4600. At the same time, we made a call sell at 4550 strike, and these are the beautiful entries we took. The only area where we went wrong was this is the area where we should have reacted at this 4750. This is one area we had mentioned in many videos, that this is our pain point, 4750. If you are trading real, or if you are sitting before the terminal, since we are just posting the videos, the next updates will come on the next morning. But normally people should have done something at this point. If that had happened, like adding some put a buy at this point, surely we would have been in terrible profit, a very big profit. But we want to show the viewers and traders, and we want to educate them that in option trading you need not fear for anything. Just we need to carry on with our strategies. Even at times in option we used to say at times you can be wrong and finally you can be right by making some few adjustments in options. So finally we did it, and this is our first video analysis for this first contract in MCX option trading. Hope you will follow that from Monday. Today we are not going to do anything. Let's go and watch the contract expiry from Monday. We will see the next contract, and it is a continuous updation for strategies. So let's see how things are working for the next contract. Thank you. Bye.